Welcome to Do It in Durham 2021. Now in its 9th year, Do It in Durham is an event series that takes place during Global Entrepreneurship Week. It is Durham Region's own forum to celebrate, inspire, and support entrepreneurship. Stay tuned as we bring on our presenter. Thank you for being a guest in this presentation. If you would like to book an appointment with us here at the Business Advisory Center Durham, just follow the information right on the closing slide, and we look forward to seeing you.
Entrepreneurs just like you. 2021 is our 9th year. Our theme is riding the waves. Just like in surfing, businesses need to be able to ride the waves, fight the sharks, and find the perfect wave. This event series is a collaboration of organizations and resources for businesses in Durham region in partnership with business owners and entrepreneurs sharing their expertise. Today, we've got the amazing Erin Rochon of Rochon Associates, who's going to be our expert in the house, and she'll be sharing with us record keeping and other amazing tips when it comes to building success by understanding your books. So Erin, take it away.
Awesome. Thank you. So as Patrice said, my name is Erin. My company is Rochon Associates, and we're going to just talk about some success and questions that often come up in regards to your finances with your business and how to organize and just make sure that you are staying in compliance and being successful with it. So again, my company is Rochon Associates. A little bit about myself. I am a full-time single mom to 2 very busy, wonderful boys. I love music, nature, time with family, friends, all that kind of stuff. I'm a very social, outgoing person, so I'm always looking for things to do. This COVID hiatus of not being able to get out has definitely been a bit of a kicker to my overall mood, but I'm happy things are opening up and have been able to get back out, see clients, see friends, see family, and all that kind of stuff. Prior to starting my business, I really never anticipated owning a business, didn't really think of it anything to be that something I would do. I always sort of thought myself as an employee, so I definitely didn't expect to be here. It wasn't a planned thing, but I will not look back. I love it. I love it every step of the way. Started the bookkeeping business in 2013. Prior to that, I worked as a dental office manager primarily. I also managed a couple of law firms and medical offices. So I did everything from hiring and the client relations and customer service and booking appointments and all that kind of stuff. And then on top of that, also did all the finances. So did all the paying the bills, making sure that everything was on track, making sure everything was ready for tax filings and all that kind of stuff, making sure that the finances for the practices were all in good to go, which is why I started my own business doing it. Once I got the business started, I hired my first staff after just 4 months of being in business. Couldn't handle the amount of work with the work schedule that I wanted to be in. So I hired somebody right away. I hired a second staff member within the first year. Again, as the business grew, just brought on more staff members just to make sure that we were keeping up with the demand. 2 friends and family and a lot of clients. I'm known as the Queen of Delegation. I'm very much about, focusing your time where you should, especially as a business owner, knowing where your time should be spent and how to delegate out to other people, what that looks like, how to hire people, what should be being delegated, all that kind of stuff. So a lot of people definitely come to me for that. In 2018, I sold my client list. My business previously was Harmony Bookkeeping and Management Solutions. So in 2018, I sold that client list to an accounting firm and restarted. So rebranched, niched into the legal, medical, and dental realm for the 2019 sort of year. And rebranded to Rochon Associates. Within 6 months of that rebrand and restarting, I was hiring staff again, and we are on an upward slide. Business is growing extremely quickly still. I've got 1 full-timer, 3 part-timer, and I'm actually hiring another full-timer hopefully within the next week or 2. So it's been a great success, and I'm hoping to sort of work with some of you in getting you to those points as well. And just making sure that your finances are where they should be and in the organization method that they would be, so that you know what your numbers are, so that you can build a successful business, which is one of the biggest keys that we have as our firm, is just making sure that you are building your business to where you want it to be. And by knowing your finances, that definitely helps with that. So next, so be in the know, be in compliance, and be in control. These are three huge areas for business owners. Be in the know. We really need, when we're building a business, we really need to know what is going on. We need to know what's going on with our, our vendors, our clients. If we have staff, what's going on there? We need to know the big picture of our business, and finances is a huge aspect of that. Be in compliance. Compliance with our regulating bodies, if you have them within your industry. CRA is a huge one. Obviously, we want to make sure that if anything comes into play with an audit, we are in compliance with them and what they require, and we're able to provide them everything that they need. Be in control. Kind of self-explanatory. We want you to be in control of your business. We want you to be in control of your staff, of your finances, of your money, knowing what's coming in and out, know what's going on, and not be going crazy and just sort of being out of the loop, or feeling the overwhelm, which we often do as a business owner, which is where the delegation comes into a huge play. Some quick tips. We want you as a business owner to limit your use of cash. So the reason why we generally say this is that cash is untraceable. So from a CRA perspective, compliance wise, if you have cash coming in and out of your business, there's no trace of it. It's hard to have a paper trail with it. Secondly, receipts that are paid with cash, CRA is not a huge fan of them because there's no confirmation of where that cash actually came from. You could have, had $100 from a partner. It could be a business expense, but another business actually paid for, but you're trying to write it off. So there's a lot of fraudulent things that kind of can happen with cash. So CRA is definitely not a fan of cash, which trickles down to us as not really being a fan of cash either. We prefer you to be using something that has a paper trail, so those receipts show the business debit account or the business credit card, or something that is showing an actual account that ties and links back to you. Keep business and personal separate. This is a common thing that sort of happens, especially with sole proprietors and startup businesses. Often we start up a business, we don't go and enter into new bank accounts. We keep the bank accounts that we currently have. So we've got business coming into the business or to that account. We've got personal stuff coming in and out of that business account, which causes a lot of inconsistencies. It makes things, as far as tracking is concerned, go a lot more difficult because it's harder to differentiate whether or not that's a business expense or a personal expense. If and when the time comes that you're bringing in additional help, so either a bookkeeper or an accountant, having a mixture in that bank account makes it really difficult for us from our end, because we're always asking questions. Was this business? Was it personal? Was it a personal expense? You went to Walmart, but did you get groceries on top of the office supplies that Walmart sells? So there's a lot of questions that end up happening with that. So there's generally a lot more back and forth, which in the end costs you as the business owner more money, versus if everything is kept separately, then we know that those expenses were business. We don't have as many questions for you when we're doing the bookkeeping. As well, on top of that, the additional item is when you have everything intermingled, you're allowing CRA more access to more things. And there's a higher likelihood of audits. So when you do have CRA come in and they're asking for books and records, they're looking at, do you have everything intermingled? Do you just have your business in one account, your personal in another account? If you have everything completely relegated to business account, CRA generally will keep their scope in those accounts and they won't go into anything personal. Reason why we start talking about some of this is nowadays, there's a lot of buy and sell sites. A lot of people are purging. A lot of people are getting rid of things. A lot of people are selling kids' clothes or furniture, just things that we don't need anymore. When you're running a business, if you have both personal and business intermingled in one account, all of that stuff that you've sold personally that doesn't really have a paper trail that's now intermingled with your business, you're risking CRA saying, that's income to your business and you now owe taxes on it, which we really want to avoid. So again, we sort of try to make sure that we keep business and personal completely separate. Know your numbers. As a business owner, it's so important to understand what's going on with your business. Know what your income is, know where your expenses are. Yes, a lot of people sort of look at it and they're like, there's money in the bank, business must be doing well. Great. But the question is, where did that money come from? Yeah, there's money in the bank, but did you throw money in there? Have you not taken any money out of the bank? Are you behind on paying some bills? Do you have credit card debt? Are all your credit cards maxed or high amounts? So just because there's money in the bank doesn't necessarily mean that you're running a profitable business. So knowing your numbers and knowing what's kind of coming and going out of those accounts, how much you owe to creditors, how much you owe to vendors, how much money is outstanding from clients that you haven't collected yet. Knowing all of those, that's extremely important, especially if you're trying to scale or you're just trying to see if you have a profitable business and should you be continuing operating that, or do you need to do a pivot, which we saw a ton of with COVID, right? We saw a ton of businesses having to pivot, having to change, really needing to know their numbers. A lot of the COVID benefits that came out that the government put out, you needed to know your numbers for those because a lot of them weighed on what your numbers were. What was your income? What was the percentage of loss? All of that kind of stuff. So it's really important to know what those are. Don't leave things to the last minute. A lot of business owners come to us in April, May, June, haven't done their numbers for the previous year, have no idea what's going on, no idea where their business was. And then when we go to file their taxes, they're like, whoa, I didn't realize I either made that much money and now I have this huge tax bill, or holy crap, my business really sucked last year and I had no idea. We're now, 6 months into your new year because taxes are due 6 months after the year ends, right? So we're now catching up on last year's stuff, and 99% of the time, that also means that your current year is not up to date and you have no idea what's going on in your current year. So try and stay up to date with things. We generally recommend at the most doing quarterly. Ideally, you're looking at your numbers on a weekly basis, especially as a growing business, and if you're trying to scale, but at the longest time period, you should be looking at it quarterly. Have a trusted advisor. Doesn't necessarily mean a bookkeeper, doesn't necessarily mean an accountant. Have somebody that you can go to, that you can bounce ideas off of, that you can brainstorm with. The BACD is a huge one. Absolutely, Patrice. It's massive. I mean, they're a great service. They have tons of trusted advisors. They've got an advisor board with tons of different professionals that you can connect with. So if you're looking for a specific professional, you can go to the BACD. They can help you out trying to find those people and make those connections. Even a good friend is a good trusted advisor if that friend can speak candidly. Okay, we don't want our trusted advisor to be our close friend who's just going to coddle us and be like, yes, sweetheart, or yeah, dude, like that's awesome. And your business is going amazing. And I'm so happy for you. Meanwhile, you're going off the rails. So you want somebody who can be candid with you, who can give you the truth, who feels free to speak with you on a level that is going to be real. And then lastly, don't try and do everything on your own. So that comes back to the delegation. As business owners, especially when we're starting out, we're wearing so many hats, which allows us to just get completely overwhelmed. And often we start missing things. We start missing important things. The finances and the bookkeeping generally slides to the back because the reality is the biggest important thing is just making sure that you're doing your invoicing and you're collecting your income. The rest of it doesn't matter, right? So it often slides to the back burner, and we want you to be able to keep on top of everything. Some common business expenses. So we often get questions of what can I write off? How do I know if this is a business expense? I need to purchase this, but can I put it through as a write-off? Can I not put it through as a write-off? How do I determine what to do? What if my write-offs are more than my income? How do I avoid an audit? All of those kind of things. So a couple of notes on that. One of the common things that we generally tell everybody is to look at when you're questioning whether or not it's an expense that can be written off. Quickly, you can ask yourself, am I purchasing this to provide the service or build my business? or using it within my business. So those three things: provide my service, build my business, or use within my business. If the answer is yes to that, then it is a business expense. Okay. Common things: advertising and marketing. All those, the Facebook posts or social media, business cards, print materials, client thank you gifts. Christmas is a big time that a lot of people do some client incentives, client thank you gifts. Those can be a write-off for your business. Business and client meeting meals, they're a 50% write-off, so it's not 100% write-off. But if you're meeting with a prospective client, if you're meeting with an advisor, if you're meeting with somebody who is helping you within your business, if you're meeting with your accountant or your bookkeeper or something like that, where you're going out for lunch, that can be written off within your business at a 50%. Any bank service fees and interest charges can be written off if you have separate business accounts. Okay, so if you are intermingling business and personal, you can't write off those business service fees and interest charges because it's partially personal. So we'd have to figure out what that percentage is to be able to figure out what part of it is business that you can write off. Office expenses and office supplies. So obviously things like paper, pens, pencils, folders, anything that you're using within your office to run your business. Business insurance. So often we have things like errors and omission insurance or liability insurance, cybersecurity insurance, things like that. Those are all business expenses. Networking meetings, which we don't have a ton of nowadays. I know there's some that are going on with Zoom, but those are definitely write-offs. Those are for you to network, to meet people, to build your business, to create some synergies with other businesses. Those type of things, definitely write-offs. Materials for completing the job. So anything that you're utilizing, having to buy in order to provide your service or your product, that's expensive. Internet, phone, and cell phone. Some accountants will have varying opinions on this. Internet, phone, cell phone, if they are 100% for business use. So some people have a cell phone that is strictly business. If you have an office where you have internet and phone that's hooked up to your office, then absolutely those are 100% write-off. For our personal work from home, we work from home, we've got an office at home. So we're obviously paying internet and cell phone and stuff like that, and we're utilizing it. A large part of it is for our business. Depending on your accountant will advise you whether or not they're comfortable with doing that at 100% or whether they want to do a percentage. Kind of depends on sometimes just what that amount is. Cell phone bills often end up being that it's a combination with partners, children, and all of that. Obviously, you can't write off everybody else's cell phone, but you'd be looking at your portion only. Payroll and salaries, and then CRA source deductions, which is the payroll taxes. So if and when it comes time to hire a staff member, when you pay them, you have to deduct taxes, you have to deduct CPP, EI. Those deductions that we make, we have to send those to the CRA. So it's not just money that you're keeping, it goes off to the CRA. So that's all deductions within your company. Professional development courses and seminars. So things that are going to develop you for your business, the person that you, or the services that you're trying to offer. If you're sort of pivoting and you need to learn a little bit more about a different industry or whatever, that stuff can be done. Delivery, postage, shipping. Obviously, if you've got products and things like that, or if you're mailing out, letters or thank you letters or things like that to clients or referral sources, anything like that is tax deductible. And then legal and professional fees. So your bookkeepers, your accountants, professional organizations that we belong to within our industries, those things. One of the common things that we also discuss, because it does come up of, okay, well, I need to make sure that my income is showing a minimum of $40,000 a year, say, for tax purposes. At the end of the year, when we're finished putting all of the expenses through, we're finished with our year end, we're now getting into the process of preparing for our taxes. We can then, as a business owner, make a decision if we want to exclude some of the expenses that we've said that we're going to write off for purposes of increasing our income. Okay, so we have a choice of whether or not we're going to write everything off. If you do have things that you need to do, i.e., you need financing coming up, you're refinancing your mortgage, or you're looking to get a loan, or you're looking to get a new car, or whatever else like that, and you need to make sure that you're maximizing your income, then we can look at what some of those expenses are, and we can take some of those out when it comes time to doing your taxes. Okay. The best way to keep track of your expenses and income. So we often get this question, what should I do? How should I do this? You know, paper receipts, electronic receipts, QuickBooks Online or another accounting program, Excel, paper and pen. What is the best way for me to track it all? Generally speaking, for the most part, I would say about 90–95% of the time, we do try to steer people towards an accounting system versus Excel or paper and pen. Main reason for that is when it comes to reviewing your numbers, when it comes to checking your business performance and things like that, when you're in an accounting system, like such as QuickBooks Online, the reports that we're able to pull to check things are so much easier to pull, right? So we can look at month over month, year over year, quarter over quarter. We can check to see percentage of losses, dollar amounts of losses. We can check to see what your income percentage is based on your expenses. And they're easy reports to pull, where if you're in Excel, we can't do a lot of those. If you're in like paper and pen, it's very difficult to do that. I do see the questions coming through, so I will sort of answer those as I can. Okay, guys. Paper and pen, obviously, again, very, very limited, right? It's a very manual system. As far as other options, yes, there are other options in QuickBooks Online. Okay, there's tons of options for an accounting system. Couple things to remember, you get what you pay for. Okay, things like FreshBooks, Wave, they're lower cost, which means that they don't have as many options. Okay, FreshBooks is free, you definitely get what you pay for. Some of these apps and stuff as well, they don't handle things such as HST very well. So if you're HST registered, then they don't handle those reports very well. They're very limited. The other thing is that some of the programs are great for a sole proprietor, but if and when you incorporate, they're not great for an incorporation, because with an incorporation, there's additional reports that we need. There's additional items that we need to track, and some of the other items don't, or the other programs don't track those things. Can you change programs between as you go? Yes, you can. Again, the biggest thing that we look at is comparatives, right? So if you're in Excel now, and then you go to Wave next year because you've grown a little bit, and then you go to QuickBooks because you've now registered for HST, you're not going to be able to do year-over-year comparatives easily, right? So we generally try to sort of say, pick a program, stick to the program, and go. Our general sort of best program that we put majority of our clients on is QuickBooks Online. Main reason for it is it's very intuitive, it's very user-friendly, and cost-effective. Okay. For those of you who aren't on it yet and are looking at it, sometimes we get a little bit of sticker shock when we look at the pricing on the QuickBooks website. Most trusted advisors, accountants, bookkeepers have discount pricing. So if you don't have a trusted advisor in those arenas, try and get one, try and reach out to one and see if we have some wholesale pricing or discounted pricing. I know for myself, I've got massive discounts that I have access to, and most QuickBooks Pro advisors do. Electronic receipts versus paper receipts. So the biggest thing with electronic receipts, obviously we don't have paper. We also don't have fading of the paper receipts that happen. As we all know, paper receipts fade over the years. CRA requires us to keep records for 7+ the current year, so 8 years in total, as far as our records are concerned. So when we have paper receipts, often they fade, they smudge away. The issue there, or the potential problem with that, is if CRA asks to see a receipt for that time period and it doesn't show any of the information, there's a good chance that they can disqualify that expense on you, which obviously we don't want to see happening. From a electronic receipts perspective, there's many different things. I've obviously got the Google Drive logo here, but Google Drive, OneDrive, Dropbox, there's all kinds of different drive storages that you can keep electronic receipts on. If you want to do cloud storage, alternatively, you can just put them on like a drive, an external hard drive, and take pictures of your receipts and keep them that way. And then as far as organizing those receipts, we generally recommend organizing your receipts based on the months that the expense occurred. And then further to that, we also recommend within that month having them separated based on how they were paid. So for example, from the debit account or the Visa, the MasterCard, the line of credit, whatever additional accounts you're using for your business. The reason for that is, again, if and when there comes an audit, generally what happens is the auditor goes through what we call our general ledger. If we're in an accounting software, they pick out random lines and they say, I want to see this receipt here. That receipt, if you're in an accounting system, we can quickly click on that receipt. We can know what account it came out of, what the date was, and what the amount was. So by having your receipts by month and then ideally by method of payment, we can very quickly find that receipt. If we're ever in an audit situation, we want the auditor in and out as quickly as possible. We don't want to be digging through a year's worth of gas receipts or a year's worth of supplies or a year's worth of whatever, which is how most people organize their receipts. They're like, okay, I'm going to keep all my gas receipts together. I'm going to keep all my supplies receipts together. I'm going to keep all my insurance receipts together, like whatever it is. But then when you do have to find a receipt for something, it can be fairly cumbersome to try and comb through all of those, and especially if the receipts are fading, sorry. And then, so if you're doing electronic receipts, we recommend the exact same filing system, right? So you have a file folder for each month, and within that file folder, you have the different type of accounts that you have. So like the business account, the credit card, the MasterCard, whatever it is, and then everything that happens within those, you just file those into those. Question here, what are the most important features that more expensive programs provide that I've been missing for a small sole proprietor? So as a small sole proprietor, so again, so your features are going to be there, but how long are you going to be a small sole proprietor? That's the question. If you're only intending on ever being super small, not growing, not registering for HST, things like that, then absolutely you can get away with some of these smaller, less costly or free programs. But if you have intentions of growing your business, potentially going from a sole proprietorship to a corporation or anything else like that, then we want you to have really good solid reporting and really good solid numbers so that you can properly evaluate those things. And part of that is being able to pull reports, pulling detailed reports as well. Sorry, wrong button there. Which brings us to the next sort of set of questions. When should I register for HST? Should I incorporate? Do I get an accountant, a bookkeeper? Do I just do everything? And should I hire help, or when should I hire help? So let's start with registering for HST. Again, common question that happens. You'll get differing opinions on this depending on who you speak to. Okay. Generally speaking, the letter of the law, shall we say, the CRA compliance is you do not need to register for an HST number until you have reached $30,000 in sales. Common misconception on that is $30,000 in profit. Okay, that's absolutely not the case. It's $30,000 in sales. Does not matter how much your expenses are, does not matter what you've spent, how much did you collect from your clients? That's that $30,000 mark. Secondly, on that is it's $30,000 in a 12-month period. So it's not in the year, so it's not January to December. It's in a 12-month period. So it's like a rotating period. So it's very difficult to track when that 30,000 happens if you're not up to date with your bookkeeping, if you're not up to date with your numbers, and if you're not staying on top of that. You need to be on top of that if you're looking at that HST. So that's the letter of the law. That's CRA compliance. You don't have to until you reach $30,000. Often we will recommend businesses to register right from the beginning or way before that $30,000. And again, it kind of comes to what type of business are you doing? What are your plans? What are your expectations for your business? What is the outward perception that you want your business to have? If we're dealing with other businesses, so if we're a business to business provider, often that's when we definitely want to register for HST, because HST makes you look bigger. It makes you look more successful. It makes you look like you've got more going on than if you're not registered for HST. Secondly, that HST, you've been servicing these customers, you've been working with these customers, they're ongoing, they're repeat customers, you've been dealing with them for 2 or 3 years, you've now reached that 30,000 threshold. Now all of a sudden what they've been paying is different because you've now had to add HST on it, okay? Which can cause some confusion, which can cause some issues, which can cause some turbulence. Some people are like, why is my bill this all of a sudden? And then you have to explain the whole HST thing. And then again, it's kind of like it's not a great perception. So sometimes depending on what your business is doing, we say register for HST right away. If you're like a hobby business and you're kind of just selling to people, you're doing things for Christmas decor and like birthdays and that kind of thing, and you're not intending on really getting anywhere close to that $30,000, then yeah, you probably would hold off on registering for that $30,000, the HST before the $30,000. Joe's asking, if you cross the 30K, do you have to pay tax on that first 30K when you get there? No. So it's after and above. So the risk that you kind of make if you're not knowledgeable of where your numbers are, that 30,000 comes in, or that HST comes into play the minute you make $30,000.01. So if you have been charging your clients and you now realize, oh, I'm now at $35,000, you did not collect HST on that $5,000 surplus over the 30. So although you didn't collect it, you still owe it. So you're now taking HST out of what your income should have been, and having to remit that to the government. Common misconception or unknown with HST. A lot of people don't understand HST and how it works overall. So I'll quickly go over that as well. So HST is what we collect on top of our income, okay? It's not our money. It goes directly to the government. So we always say when you're billing, when you're invoicing and you're registered for HST, set that HST aside. HST in Ontario is 13%. So 13% on top of your invoice is the HST that you should be charging. That money should automatically go aside. So we often say to put that money in a separate bank, okay? Then the expenses that you incur as a business every time you spend money, if it has HST on it, that HST then credits the HST that you've collected. So if you've invoiced and you've collected $100 in HST and you have expenses that have paid out $50 in HST, you owe the government the difference. So 100 minus the 50, you owe the government $50. Okay, so that's kind of how that works. You're not remitting the entire amount of HST that you've collected. Okay, you're basically just remitting to them the difference. Your remitting periods can be monthly, quarterly, or yearly. Generally speaking, we try to recommend doing quarterly. Couple reasons: less of a sticker shock when you have to send the HST to the government. Secondly, it forces you to stay on top of your finances, because if you have to remit quarterly, that means you have to be doing your bookkeeping quarterly so that you know what you're sending to the government. Okay. Question came in, does a 30K reset every year? No. So that's what I was saying. So the 30K, it's concurrent, right? So that deciding factor is once you hit 30,000 in a 12-month period. So you always have to be tracking back 12 months to see what your income is before you have to register. Secondly, on that is once you register for HST, you don't pick and choose now whether you're charging it. Once you're registered, you're charging it forever, basically. If you're trailing down your business and you're now, let's say going into retirement phase, and you're just going to kind of be changing it into like a hobby, and you're not going to hit 30K, and you're never going to hit 30K again, then at that point you can get CRA to cancel the HST registration. And you can basically opt out at that point, as long as you are sort of trailing out the business. But once you're registered, you keep it. So if you registered for this year, you make $35,000. Next year, you only make 28. You still needed to be charging HST on that 28 because you've registered for that HST. Okay. Should I incorporate, or when should I incorporate? A lot of businesses start out as sole proprietorships, which basically means that the business is you are the business. You file a normal tax return, which has a business schedule on it that gives your income and expenses. And then you pay taxes as a person would at the end of the year. Incorporating, which generally comes later on. Most people don't incorporate right out of the gate, depending on the industry you are. Some people do right away, but most people don't. Incorporation is a separate entity from yourself. So you are the owner of the incorporation, but at the end of the year, you're going to be filing two separate tax returns. You're going to be filing a personal one, and you're going to be filing a corporate one. When should you incorporate? The simplistic way of looking at it, and the quickest and easiest way for us to explain it generally, is you're going to incorporate at a time in which you are able to leave a large sum of money in the corporate bank account. Okay. So if at the end of the month you're draining the corporate bank account or the business bank account because you paid all your expenses and the rest of the money is coming to you, generally there's no benefit to incorporating. Okay. The benefit to incorporating from a financial perspective is corporate tax rates are a lot lower than personal tax rates. Okay. So if you're able to leave a good chunk of money in the business bank account and not have to draw everything out, then that is when you should start looking at incorporating. There are obviously other scenarios when people look at it for liability perspectives, or if you're partnering. I always say, if you are doing a partnership, please incorporate. Do not do it as a sole proprietor partnership. Things get muddy, things get messy. It is not fun. I've had 4 or 5 of them that have tried to dissolve in the last couple of years, especially with COVID, and it is not a fun scenario. The tax situation is also very tricky when it comes to that. So if you are doing a business with more than just you, highly recommend that you incorporate right from the beginning. Okay. Question came in: if you sell different things based on whatever you could, if the income from all different sources goes above 30,000, should I apply for HST on that? Yes, generally speaking, that is the case. There are, again, so there's always, limitations to certain rules, or there's always exceptions. There are some things that are like what we call 0 rated for HST. They're exempt from HST. So depending on what that is, you as a person, generally as a sole proprietorship, all of your income that you're making from any business is lumped together with that 30K. So even if you have 2 separate revenue streams that are completely different from one another, that 30K encompasses both. So again, there are some exceptions, but generally speaking, it's as a sole proprietorship, that 30K is any income producing revenue that comes in. Okay. Next question: accountant versus bookkeeper versus me. You have a couple of different options when you're talking about your finances. Obviously, most people starting out a business, they're like, I can't afford a bookkeeper, I can't afford an accountant. I'm just going to do this myself, and we're going to run with it. Common issues that sort of happen with that then is often you're just not doing it. You're too busy building your business, working in your business. Most people start a business because they're great at their trade. Most business owners are not great at finances. So you're just kind of like, nope, don't want to do it. Oh, I'll wait till next week. Oh, that doesn't matter. I need to do this sales call. I need to make this. I need to do this. I need to go to this meeting, whatever else. So the finances just continue to go sort of by the wayside. Accountant versus bookkeeper, two different things. Okay. Myself, I'm a bookkeeper. I do not do taxes. Not to say that bookkeepers don't do taxes, because there are some bookkeepers that do provide tax services. Generally, bookkeepers will do personal tax returns with business, so sole proprietor business tax returns, but they won't do corporate tax returns. Most accountants don't do bookkeeping, so they don't do the day-to-day. They do the taxes, they focus on tax planning, they focus on getting your taxes done, but they don't do the day-to-day stuff. Okay. And then when should I hire help? So I put on a little image there that says, together everyone achieves more, which is the team. This is a huge, huge, huge thing. If you are questioning yourself in your business, should I hire somebody? My key response to that is, it's too late. You should have already done so. Okay. Because generally when we're asking, should I hire somebody, we're already at the point of now overwhelmed. We're at the point of, oh my goodness, I'm missing things. I'm not getting up. I'm working crazy hours. I can't get everything done. So now you're trying to maintain what you're looking for and what you're doing within your business, now trying to also hire somebody, right? So you're adding another task in, and it can kind of become very overwhelming. And then often you end up hiring the wrong person. Okay. So I often recommend, and as I said right at the beginning, I've been known as the Queen of Delegation. I'm all about hiring help. Hire for various different things. You know, there's all kinds of different areas within your business that you can hire, from super cheap help to more expensive help. So there's a lot of different things to consider there. Let me just see what this question was. Exceptions to HST, way too many to discuss in this. I would recommend reaching out to an accountant or a bookkeeper to talk about what those are. As I said, there's different industries that are exempt from HST and that aren't required. So there's a lot of different things, but the stuff that I went over is the majority of situations. If the corporation has a joint venture with an investor, how does the investor get taxed with the profit shares? The corporation taxed for the profits of the investor. So I will leave that to an accountant. As I said, I do bookkeeping. I don't do taxes. So that is definitely not within my wheelhouse when it comes to taxation and how investors versus the shareholders and stuff get taxed. That is definitely an accountant that I would recommend. Do I have an accountant you work with? Yes. So I have a couple of different accountants. I have one accountant that I would say majority of my business owners get their taxes with. And then I also have a couple of other accountants. Kind of depends on what the business is, depends on what the tax situations are as to who I recommend. Obviously more complex businesses need somebody who's got a little bit more complexities or specialized knowledge. So we sort of go with them. Okay. All right, so just wanted to throw in some quick notations here, some essential productivity hacks for businesses. Again, as business owners, we are wearing a million hats, okay? So here's a few quick things just to sort of note. Have a list of priorities. I always say keep your to-do list going. One of my business coaches at one point sort of said the other thing that she uses is what she calls a parking lot. So it's like, oh my gosh, I have this amazing idea of what I need to do with my business. You know, that's something where if we're looking at changing the business, if we're looking at adding a service, if we're doing anything else like that, we generally try to put it into the parking lot so that we don't often get attracted by this squirrel mentality, and we keep focused on what we really need to. By putting something into a parking lot, we're kind of like, okay, we'll come back to that in a week. And if it still seems like a great idea, then we can start evaluating it, or in 2 weeks or in a month or whatever. Attack the worst first. So, you know, those pesky tasks sometimes that we're just like, we don't want to do it. We don't want to do it. We don't want to do it. It will linger in the back of our mind. It will linger in our subconscious. It keeps us up at night because we still haven't done it. So I always say attack those first so that they're just off your plate. Learn how to delegate, hire people, contract people, get some stuff off your plate. Stop checking emails compulsively. We can get into that email social media trap, right? We can just get sucked right in. So try and focus, right? Focus your time, focus your efforts. Keep meetings short. One thing that I stopped doing was hey, let's grab lunch, because people just want to pick your brain. And it's a waste of time, right? So I try to do phone calls or Zoom meetings now, which has been huge with COVID, right? Everybody's kind of doing those now. So we're trying to kind of keep those meetings short and keep them going within our time schedule, right? Making sure that our time's efficient. Go paperless whenever possible. Paper is always clutter. Paper is clutter in the mind. Paper is clutter on the desk. It makes you inefficient. So try and go paperless when you can. Get up, move around, don't sit the whole day. We get in that rut, especially when we're working from home. We sit down at the computer. I'm so guilty for it. I'll sit down and I'll go 4 or 5 hours. I won't get up. I won't have a drink. I won't do anything. Then you stop being productive, right? You just stop, everything slows down, right? So get up, move around, move yourself, do some jumping jacks, go for a walk, grab some water. Multitasking, again, I'm huge with this. I shouldn't do it, and I preach to everybody not to do it, but try and complete the tasks that you're working on. If you're jumping from here to there and all over the place, again, just less effective. Let it go to voicemail. Don't feel like you have to answer every single phone call as it comes in, right? If you're in the middle of doing something that you need to stay focused on, leave that call, let it go to voicemail, put the phone on silent. The phones all have like do not disturbs and focus times and everything else that you can set now. So feel free to sort of push those over. Any questions that haven't answered? I think I saw something come up here. I know Patrice, you just mentioned. So HST collected that goes to the government. So HST collected is 13% that you collect on your sales. The percentage that goes to the government is completely different based on your business. It's all based on the expenses that you have that have HST on them, right? So some businesses have expenses, but they don't have HST on them. So obviously you would be sending more of that HST that you collected to the government. Some of them have less. So it's very, very much varies based on the business that you have.
Thank you for being a guest in this presentation. If you would like to book an appointment with us here at the Business Advisory Center Durham, just follow the information right on the closing slide, and we look forward to seeing you.